Let's talk Bitcoin. Does it belong in retiree portfolios? And if so, how much? In today's video, we're going to cover what Bitcoin is, how it actually derives value, some of the historical performance, and what some leading experts are saying that you should have inside of a retirement portfolio. We'll also cover how it correlates with other investments and to see if it actually could make sense inside of a diversified retirement portfolio. Now, before we really dive in, I want to make sure that this video in no way is a recommendation for cryptocurrency in general or Bitcoin. It's simply meant to be educational in nature, and everything that you learn today is not in any way meant to be a recommendation or any type of investment advice. If we've not yet met, my name is Danny Cieniewicz. I'm a CFP professional with Hyperion Financial. I have created a quiz, and I put that in the description when it comes to tax planning and retirement. So let's first start with cryptocurrency in general. What is cryptocurrency? So at a high level, cryptocurrency is essentially just digital money, which exists solely online. Most everybody else is familiar with other types of currencies, such as the US dollar, for example, or the euro. And while they can be transferred digitally, you can also utilize these as legal tender. Now, with those types of currencies, most of those are issued by government agencies or by countries or sovereign nations. However, when it comes to cryptocurrency, it doesn't have that same level of government oversight. Cryptocurrencies operate on decentralized networks and they're based on cryptography, where it gets its name, cryptocurrency. Now, you may be familiar with the most common type of cryptocurrency, Bitcoin, which was first launched around 2008 to 2009. So this type of currency is something that you could exchange between parties that you don't necessarily need a bank to intercede on. The actual very first Bitcoin purchase was for 2 large pizzas. The amount, 10,000 Bitcoin. This transaction, as nearly every transaction with Bitcoin, is verified by computer blockchain technology. Since they only exist in digital form as well, the other thing that you want to keep in mind is that it doesn't quite have the control that government issued currencies would have. One other important factor when it comes to cryptocurrency, specifically Bitcoin, as opposed to something like the US dollar, is that Bitcoin has a limited supply. There will be a total of 21 million Bitcoin that are created in its existence, and it will not go beyond this number. That's actually something that I think gives it value, is knowing that there's a set number of Bitcoin that will actually be in existence. The scarcity itself is actually built into its code. However, when it comes to the US dollar, there are going to be more and more printed each and every single day. Therefore, there could be an infinite number of US dollars which enter the system. But when it comes to Bitcoin, there will only ever be a maximum of 21 million. So where does the actual value of Bitcoin come from? There's really no intrinsic value in Bitcoin. And you can make a similar argument to other types of assets, one of them being gold. Gold obviously does have some use cases for sure, whereas cryptocurrency, the use case itself could be an exchange of value. But again, the question becomes the value of what? There are some ways in which I think it can derive its value, though. The first one comes from supply and demand, which is where many assets actually derive their value. Price is obviously where buyer and seller will meet. So as demand goes up, usually the price goes up. When supply goes up, usually the price will go down. But when demand and supply are working in conjunction with each other, that's where price will meet. That is where Bitcoin typically can get some level of its value from. As mentioned, something that's popular to people is the fact that there are going to be a finite number of Bitcoin. Being that there's only going to be 21 million Bitcoin, there's value in its scarcity. Being that the US dollar will continue to be printed as nearly every other currency will be, there isn't quite the same level of value inside of those currencies. Another thing that is continuing to catch on are some of the network effects that are out there. And what that means is that as more and more companies and individuals are utilizing a cryptocurrency to buy and sell goods, you could see that the value of cryptocurrency and Bitcoin in particular continue to go up. Much like the value of social media went up in the early 2000s, when more and more users were using things like Facebook, Twitter, and even Google, the value of Bitcoin and cryptocurrency can go up as the use case for this continues to go up. And lastly, there's definitely a bit of speculation that's taking place with some of this. Some people just want to dump money into Bitcoin, see it go to the moon. Once they're happy with the returns, they will get out and sell. So there is definitely a level of speculation that goes into this, which many people feel could overinflate the value of Bitcoin. Now, Bitcoin has found itself in the headlines several times, and usually it's for good and bad reasons. The first time it likely found itself in the headlines was in the 2010s, when it went from $1,000 to $10,000 very quickly. It's depending on how much Bitcoin you would have owned or how much you would have had in Bitcoin, you could have made a very, very nice return in a very short period of time. That happened again in 2017, in 2020 to 2021, and in 2024, it nearly doubled in value. There have been some major bull markets that we've seen with Bitcoin, and as a result, it's made some people very wealthy overnight. However, it's also had major crashes where it's lost half of its value on several occasions. In 2018, shortly after the 2017 run, Bitcoin fell 80%. It lost 80% of its value, and it took nearly 3 years for it to recover. We've also seen several years where it's down 50%. There are daily swings that you could see with Bitcoin, and a 10% correction in one direction or another is not uncommon. As you can see how Bitcoin has performed with several of other asset classes, Bitcoin has experienced several highs and several lows. Now, depending on when you would have owned this, if you did own this, again, you could have either made out very well, and depending on when you would have sold it, you could have lost a significant amount of money as well. Being that Bitcoin is one of the more volatile types of asset classes that we're looking at here, again, there have been winners and losers through the years, and depending on when you have purchased in and sold out, you could have noticed either a sizable gain or a sizable loss as a result. But if we take a look at the chart, Bitcoin, while it has done well over the past several years, has either been the top performer or the bottom performer. As you can see with Bitcoin, there's really not much in between. Despite Bitcoin's volatility, it hasn't stopped major companies and major financial institutions from now beginning to adopt it and offer different types of cryptocurrency or Bitcoin specific funds and a way for retirees to invest this at the institutional level. In addition to some actual companies owning Bitcoin directly, some are now offering ways in which you can own Bitcoin directly at the institutional level. So, for example, BlackRock has now come out and said that a 2% holding in cryptocurrency isn't a crazy thing. They even go so far to say as it could be reasonable for diversified portfolios. Now, again, this video is in no way meant to be a recommendation, so I'm not recommending that you go ahead and take this information and own any level of Bitcoin or cryptocurrency in your portfolio, but it is something that you should be giving consideration to with how it works from a diversification standpoint. Keep in mind that we've seen high highs with Bitcoin and low lows. So if you would have 2% in your portfolio, for example, if you have a $1 million portfolio, $20,000 in this example would be invested in Bitcoin. If it experienced a 50% loss, you just lost $10,000. If it had doubled and experienced a 100% gain, you would have gone from 20,000 to 40,000. Obviously, both are speculative, and it could go down by more than 50% as we've seen. It could go up by more than 100% as we've seen as well. But understand that it's important to make sure that however you're invested or whatever your overall portfolio mix consists of, you take into account that Bitcoin is incredibly volatile. One argument that's been picking up steam for why Bitcoin could be considered is its diversification. However, the hard part to measure is since Bitcoin is such a new asset, we're not sure exactly what the correlation of it is. If you look at correlation of gold, generally speaking, in times of market corrections or in times of market uncertainty, gold tends to do very well. When consumer sentiment is down, gold is up. When consumer sentiment is up, gold usually tends to be level or down. While this isn't true in every single scenario, taking a look at historic data, this is an observation that isn't completely unfounded. When it comes to Bitcoin, we have seen some correlation to stock market returns, such as the S&P 500, but there are several differences when it comes to stocks versus cryptocurrency. One just being the simple fact that the stock market has had a century of data which we can base off of. Bitcoin, at most, has about 10 to 15 years, and even then, it has been incredibly volatile. We also know that stocks have underlying value, being that they represent ownership in a specific company. Bitcoin or cryptocurrency just represents a holding in a cryptocurrency. There are no earnings or dividends that cryptocurrency ends up producing. Again, it just has the intrinsic value based on some of the factors that we talked about earlier. People have compared cryptocurrency to something like commodities such as gold. And again, there are some similarities there. Both have a limited supply, and both are also non-producing assets. There are no dividends or earnings that either gold nor Bitcoin would produce. However, gold also has thousands of years of a track record associated with it, whereas cryptocurrency simply does not. While gold can still tend to be volatile, its volatility, specifically in recent years, doesn't compare to Bitcoin's volatility. There are also industrial and jewelry use cases for gold, whereas cryptocurrency, there simply is not. So, what does that mean for retiree portfolios and cryptocurrency? Again, what I think we should be looking to do is instead of looking at cryptocurrency as a new upcoming thing, peeling back the onion and saying, well, what should a retiree portfolio consist of? For most retirees, you still want to make sure that you're keeping pace with inflation if you have a 25 to a 30-year retirement ahead of you. You also want to make sure that you take into account that there could be sizable downturns in markets. As a result, you don't want to be too over leveraged in one specific asset class. Being that that's the case, you want to make sure that you have a portfolio that can withstand a hit with certain asset classes and is diversified enough that if you're consistently taking from this account, that you're able to make sure that the preservation is available to you long term. So, can Bitcoin fit into that? Well, Bitcoin definitely has a use case for a long term return standpoint. And we can take a look at that again based on some of the data that we've seen over the past 15 years. Now, again, we also have to be careful as past performance is in no way indicative of future results. But if we are looking at the past 15 years, Bitcoin has done well and has been a capital appreciator. However, the question becomes, will it perform in lockstep with market returns? Will it negatively correlate or will it have no correlation whatsoever? I still think it's a bit too early to answer that question to know for sure. Regardless of how you feel that you should be invested, you want to make sure that Bitcoin or any level of cryptocurrency, if you're going to invest in it, you understand the risks and rewards that it can offer. Building a retirement portfolio is one of the most important things that you can do to make sure that you're able to, again, keep pace with inflation while also making sure that you're able to preserve these dollars and enjoy them over your retirement years. Working with a trusted planner is one of the most important things that you can do. Check out our website, hyperionfp.com, if you'd like to learn more. If you're also interested in other types of alternative investments, check out the video that we did on gold, and you can check that out by clicking here.